It's Tuesday, March 29th, 2022. I'm Ashley Pollard here for today's edition of Tuesday Talk, where we review common real estate and mortgage-related topics. Today's topic is how to finance a distressed property. So just a recap from the last 2 weeks since we've talked about distressed properties. Some challenges that you run into are, instead of dealing with a homeowner, you're actually dealing with the bank, which has their own agenda to get through. And also, distressed properties are often in poor condition. So this leaves the question of, how can I finance this type of purchase? First option, which the banks love the most, is cash. And most investors will offer this. So you are going up, if you're not an investor using cash, you are going up against that. Secondly is a conventional loan. In order to use a conventional loan on a distressed property purchase, the home must be in livable condition. But unfortunately, many distressed properties are left vacant for extended periods of time, and they often have issues such as outdated electrical, maybe some plumbing issues and things like that that you might run into. So sometimes it is okay and possible to use a conventional loan, but sometimes you'll find that it's not possible. So what can you do in that case? You can use a renovation loan, and one of the big advantages of using a renovation loan is the ability to finance not only the purchase of the property, but you can also finance the cost of the renovation into one single mortgage. Now, there are renovation loans that are meant for limited repairs, and these don't require structural plans or engineering, and they can cover things like new siding, new windows, or even new appliances. For more extensive fixes that do require plans, which might be taking care of structural damage per se, you have to hire an independent consultant who will then inspect the property and make sure that the work is going to meet the program guidelines. One drawback to renovation loans is the price. They are going to come with mortgage insurance, and you will often have to pay higher interest rates than you would on a traditional FHA or conventional loan. Next option that you can look into is using your home equity. So first thing you can do is a cash out refinance. With cash out refinancing, you're taking your existing mortgage, you're going to refinance it into a higher loan amount, and then with that extra money left over, you will finance your renovation. This is something you're going to have to speak to your loan officer about, because you'll have to identify how much equity you have in your property to see if it's a good option for you. Another way to use your home equity is through a home equity line of credit, which is known as a HELOC. If you're not sure what that is, please go back and watch my video on HELOCs. But with the HELOC, you can tap into the equity that you have in your property through a line of credit. So for example, let's say you have $100,000 in equity in your home. The lender will allow you to borrow up to 80% of that, which is $80,000. You can then take that $80,000 line of credit and use that to go finance the purchase of your distressed property. In New Jersey, we don't really have many, if any, properties that are priced at $80,000, but depending on where we are in the market and the status at any given time, this might be an option. And if you have a little bit more equity, you will be able to tap into a little bit more than that. So again, just speak to your loan officer to see if that is a good option for you. Another option you can look into is a hard money loan, and these are awesome because they are short-term loans. They have lower requirements in terms of down payments and credit scores required. They can be funded in a very short amount of time, some even within days, and the borrowers have access to larger loan amounts because the mortgager is going to fund based on the after repair value once the property has been rehabbed. A drawback to hard money loans is that they come with significantly higher interest rates. Sometimes you're looking at 10, 12, 14%, just depending on how experienced you are. And in connection to experience, the lender is going to ask you to prove your experience as a real estate investor. So you might have to submit to them a list of past projects, maybe contractor estimates, or even a scope of work. Non-traditional options that you can think about are partnering with friends and family who might be willing to lend you some funds in exchange for ownership in the property or maybe some of the profit. And depending on where you are in your retirement process, you might actually be able to tap into your IRA or 401k account. These are things you should talk to your loan officer and or financial advisor about, because no matter which option you choose, you want to be sure that you're choosing the one that is suitable for your needs. If you need a loan officer to speak to, just reach out to me and I'll connect you with one. I also have loan officers who specialize in renovation loans, and they would be glad to assist you with that. And I have contractors even. So whatever you need, if you don't have, just give me a call. I appreciate you for tuning in to today's term. I hope you enjoy the rest of your week, and I will see you next Tuesday.